welcome to the OPN Network Live. I'm your host, Jeffrey Pogman, and today we're talking about selling a business, savvy selling, what to consider when cashing in your business. I'd like to welcome my guests this evening, Frank Odino, Michael Assad, and Michael McCarthy. As I'm growing my business, I'm thinking I'm going to have to sell at some point. And I think this is where we're kind of got to that pinnacle point where we need to talk about it. What happens when I sell my company? Or how do I sell my company? And I think we got three great guys that can talk about that. They've gone through the experience. I'm going to turn it over to Michael, Mr. McCarthy. Jump in and give us a little bit of background on yourself, and we'll go from there.
I was in the business of training like high performance athletes and like grassroots level things, mostly in the world of baseball. But we also did train some other athletes in hockey, football, basketball. Just started that business with one partner and one employee in 2003, and I was able to sell back in November of 2015. Kind of the main thing right now would be this. It's called Radicool UV Beachwear. It's like a highly protective, sun protective clothing company. It's been around for about 30 years. It's out of Australia. It's been in Canada for over a dozen years. So that's a fun and new challenge for me.
All right, Mr. Assad, you're up.
I am Michael Assad, and I currently am the owner of a company called Clear Blue Ionizer. We build a system that's for pool and spas. It adds minerals to the pool and spa to fight bacteria and algae so that you can use less chlorine. The business that we're discussing today is my previous company, Agility. It's a web software company, a SaaS company. I started that company in 2002 till around 2012-ish. Then we started talking, my partner and I, about how to separate it because we came to a bit of a crossroads in terms of strategic direction, and he wanted to go one way, I wanted to go another way. So we spent the next year trying to figure out how that was going to work, and it ended up with him buying me out.
All right, Mr. Frank, you're up, buddy.
I sold my business in 2010. I owned a company that was in partnership with Rogers Media, and we grew into a $50 million plus company, and I sold that in 2010. And to be quite honest, I thought I was going to retire up north, and I was the youngest guy, and I got volunteering there, and that's where I got my taste for volunteering, something that, as you know, Jeffrey, continues today in my community. Currently, I own a business development company, and I don't spend much time on that, to be quite honest. I spend most of the time with Startup Durham, which is a not-for-profit, if you will, entrepreneurs, helping entrepreneurs. I'm also an angel investor. I have several in my portfolio outside of my traditional investments, if you will. And I just came off chairing Spark Angels for Durham Region, where we have about 40 members that invest in startups.
When you decided to sell, what actually drove you to do it? Was it because you got to that pinnacle point where you were like, you know what, we've grown too big, I got to move on? Or what was it that actually kind of drove you across the line?
When we bought the company, it was bleeding. It was bleeding pretty badly. And we grew it to a 98% market share. But basically what our company did is taking all the magazines and putting them on the newsstand. So all the marketing and distribution, all the logistics, Canada-wide, worldwide. But it was a period of consolidation. So we weren't looking to sell. We were approached to sell have greater consolidation. And the company that bought us is, one of the major players is the Jim Pattison group of companies. And it took about a year and a half, which was very difficult because you're trying to still grow your business. You always do the best thing. You still are very loyal to your employees and your customers. So trying to keep that and providing all the data and financial reports. I'm sure you folks, I don't know if you know who the Pattison group of companies, but everything was about the financials, as you know, when you sold your company. So it took about a year and a half. And the only one that knew it was myself, another shareholder, of course, Rogers Media, who was a shareholder, and our financial guy, our vice president of finance. So about a year and a half.
Mr. Assad, how about yourself? What was the driving factor that kind of decided, like you got to a pinnacle point, you decided to sell, and how long did it take you?
For us in the content management space, shortly after the recession in 2008, 2009, we went through a bit of a tough patch, and my strategic goal was to kind of get get away from some of the complicated custom things that we were doing, which were very difficult to scale, to find the right people to do the work. This wasn't a business that I was interested in scaling. It just wasn't my thing anymore. I just didn't really feel like trying to scale this type of business, a service-based business. So we came up with a content management solution specifically for magazines. But it was right at a time when magazines were really hurting. They didn't have a lot of money. They didn't have money for digital, and with the recession and everything else affecting our core business at the same time. And also, an even bigger kicker was the WordPress phenomenon. So we were charging, I think it was like $15,000 plus a monthly fee for a full magazine solution for online, including mobile. But WordPress was offering that for free, and there was tons of developers and tons of hype around it. So just all these things kind of came together, and that solution didn't really pan out. It started out actually with my partner, John, coming to me and saying, Mike, I'm not interested in this product strategy. I want to get out of the business. So let's figure out how to get me out of this. And after about a year of trying to figure out how to get him out of it, and through all this other strategic change, it actually became, it started to make more sense for him to stay and for me to leave. He ended up making me an offer, and I was more or less forced to take it, although I wasn't too unhappy with it. And then he wrote me a check for most of the shares, and then I still retained some ownership, which I then had a put clause for, which is a way to force the sale of the rest of the shares. And I executed that as well. I think almost exactly, I think it was either a year and a half ago or 2 years ago, something like that. And we're just working through the rest of that.
Mike, I think you kind of have some very similar as well. So maybe you can jump in there and share some of your ideas.
After probably 9-10 years, it got to a point, we've probably done everything we wanted to do and not take it beyond where we were in terms of, all the different things that we were doing and the size that we were and all that. And it was just time for me to move on. We weren't the most liquid of assets to be selling. So we had to take a plunge and let it out there in our little marketplace that we might be for sale. Which was a bit of a risk because really our whole business, not dissimilar to most businesses, but we were really very much based on personal trust and relationships, and we were a little scared about that happening and what could happen to the business in the interim before it was sold, if it was ever sold, and if we never sold it, were there going to be long-lasting negative effects? Thankfully, there does not seem to be any proof that occurred, but I think it's a risk nonetheless. But anyways, the process probably took about 2 or 3 years of kind of letting it be known that we might be for sale, and actually being able to exit. My partner is actually still there, even though he kind of wanted to leave. He did remain with the business, and I was the one who was able to move on.
From someone selling their company, the key to selling your company is that they want true facts. They want financial data that's live and accurate. And if you're spending all your time trying to sell your company, then you can start to have that suffer and start to drop because you're spending so much time answering questions and working with the companies that are trying to buy it. So how did you manage through that 2 years or 1.5 year window where you had to balance through growing your business at the same time as working with these companies that were trying to sell?
Well, first of all, I want to clarify that, we were approached to sell, but we were, it was a period of consolidation in the magazine distribution, and the wholesaler guy that, they're the ones with the trucks. We were the marketing arm, and then there's the retailer. And one of our buyers, of course, they owned it from A to Z. It was very difficult because I know both Mike and Mike mentioned it. You have employees and you have customers and you have relationships, and the folks that bought the company were very good to the staff. Nobody was let go. So that was nice because we wanted to make sure that they took care of the employees. But I was very fortunate that I had partners that did that, because to be quite honest, that was not my expertise. And then, of course, we also had good counsel. We had 2 lawyers, because the company that bought us, they have counsel on staff. And that was part of the most expensive for us, was making sure that we had good lawyers and, of course, our chartered accountant.
Mr. Assad, what are your thoughts? How did that work out on your end?
For the most part, I think we did a pretty good job of keeping the business rolling along. And, with that division of him looking for someone to buy his shares and me kind of focused on sales and marketing, it seemed to work out pretty well. But then when we sat down, we had the discussion and he kind of flipped it around on me. That happened very quickly. And from that point, it was 2 weeks and it was done. There's definitely lessons in there on how quickly a deal can get done if you trust the person you're dealing with. I think that was the key thing for us.
What was those changing effects that actually allowed you to exit and not feel emotionally connected to your business?
I really do think that you should design a business from the very beginning to be something you can sell or have some kind of exit strategy, whether it's pass it down to your kids or shut it down or sell it or whatever it is. I think that's really important. And a lesson that I learned is to have an exit strategy of some kind in mind right from the very beginning.
That is the number one thing that I want to know as an angel investor is I'll give you not only the money, I'll give you my relationships and my skill set. I'll make contacts. I'll introduce you to people. But at the end of the day, I just want to know when you're going to get out. And that's the number one question that an angel investor. And to your point, Mike, I just wanted a good paying job and build equity on the side. I wasn't thinking about, hey, is some company going to come around and buy us? But that's what happened.
I found my business identity was being tied in too much with the business, and I did not want to be known as like the sports guy, the baseball guy, because that was never my intention. While we had set up a pretty good business that was humming along quite well, and I could have stayed for 20 more years maybe. I just knew it was time for me to go. It's kind of like the actor who gets typecast because they stayed on a show too long. I just felt it was time for me to leave the show, even if it was not quite, even if it hadn't jumped the shark yet. It was time for me to leave.
So when I left the magazine business, I had a non-compete. And, it was nice. They paid me for a couple of years not to compete. But I've been doing magazines and, distribution, circulation for almost 26, 27 years. So giving that up, even though I went to do another business for them that was in the space, it wasn't the same. And I lasted there maybe about a year and that was it. We did some good things, but and then I went up north. I was ready to retire in cottage country. But then my wife got a taste of the winter up there. So we came back to the city and I started, I hate the word consultant because I'm more of a practitioner versus a theorist. But, and that's what I've been doing for the last, 10 years, if you will.
Only just recently, I think now, figured out that I'm in the business I want to be in. But it was 3 years of really tough slogging. And I think that's really important to keep in mind as well if you're looking to sell the business is if you are coerced or encouraged to have some kind of non-compete, that you have some other way to go and some other thing to do, or you put some limits around it, or just really think about what you're doing next, because that can impact like what you think the value of the business is and lots of other things.
You sold your company. You're trying to figure out, what are you doing? Are you going to seminars? Are you going back to school? Are you going to conferences? What are you doing? Like what actually gets you going and driven to wake up the next morning to say, you know what, I got money in the bank, but I got to do something now. What gets you going? What is it? What do you got to figure out?
Well, yeah, similar to Michael, it was a nice exit for me, but certainly not enough to retire on. So I have two little boys that remind me every day that I've got some mouths to feed over the next number of years. So that's all the inspiration that I need to get up and going every day. My plan was to take a lot of time off. I knew I would be restarting me, but I was always okay with that, knowing that it would be tough. I mean, I started something from scratch once. I figured, why can't I do it again?
Frank, on your end, you took a different path. You started doing a lot more work, working with communities and trying to build things up. So what kind of drove you into that space after kind of selling your business?
So I went up north and I discovered, like most cottagers, that, my Halliburton was one of the poorest in all of Ontario, usually last or second last. So I just got involved with, kids' breakfast program, and we were trying to buy a business up there. And there's an association called Halliburton County Development Corporation, and they asked me to help some of their businesses grow while we were looking. And that's where I got my taste. So we came back to the city, and then I started doing it here in my community. I helped a few others grow, but it was really the Halliburton that got me the taste of helping others achieve success to what the definition of success is.
Maybe you guys can give kind of 3 things that you guys think that really stood out in the process of selling your business that could enlighten kind of an entrepreneur while they're thinking about selling their company.
Again, I think it's important that a lot of this stuff is considered upfront as part of the overall plan and exit strategy for the business. And it doesn't have to necessarily be, 100%. It's not going to be 100%, but you've got to have some practical potential outcomes of exit. And so a lot of that stuff should be considered before you even get into business. I think that's the way I look at it now after that experience. The other thing is that I think you can get really caught up in is the valuation of the business. And obviously that's based on primarily on revenue and profit and growth and those types of things. For us, like our experience, we had a very easy time at the valuation, and I know that we took a very pragmatic approach to valuation. We just basically said, well, our revenue is this. We have this much recurring revenue. Our profit is basically negative at the moment, so that's a hit against us. And we threw some numbers kind of back and forth, like back of the napkin type of thing, and we came up with something we were both happy with without involving any lawyers or valuators or anything like that. And I think that helped keep things more civil. That really helped keep things, simple. And, years after, we're still great friends and we never stress about anything. And we both feel like we got a good deal. So I think valuation is something that you can really get hung up on. And so it may be having the model of the valuation as part of your exit strategy is a good way to keep kind of the stress and headaches of the exit to a minimum.
Have a good lawyer if you can from the beginning, especially if you're in a partnership. You're going to need a shareholders agreement. You have to have that. I mean, it's a foundation upon which you will refer back to, maybe not every day, but if you're going to sell it, it's going to come into play. Or if you have troubles, it's just something that you need to get done. Do not think that you don't need it, even if it's your sibling. Stay in touch with your lawyer throughout the lifespan of your business. Make sure that all of your, minute books and everything are all up to date, because if all that stuff isn't clean, it's going to catch up to you at some point. Similar, have, strong accountants and bookkeepers. Again, if that stuff isn't clean, it's going to catch up to you when it comes time to selling your business. And then valuations. Yeah, be realistic with valuation. I've worked in banking and accounting before all of this entrepreneurship stuff. So I got a really vast network of professionals in all sorts of different areas of business that, I've always been able to call upon. And if you don't know those people, try and find them and find people that you can trust. Because if you don't have a realistic expectation, you're probably going to have a difficult time finding someone that you can make a deal with.
If you're on your own, if you don't know if you've never gone through the process of selling a company, get people to help you. That's as simple as it can be said. Both Michael and Mike touched on that. If you have partners and they've done it, both Michael and Mike touched on trusting them to make sure that they're going to do the deal, because at the end of the day, they're going to get as much as you are out of it. And then the other thing the third thing I would say, for me, my experience was that it was all about the finances. They didn't care about our growth and the monster growth that no other company did in the last 5 years. It was all about finances. And that's why our VP of Finance was the most crucial. And of course, what they did also, and you have to watch out for this when you're selling your company, is sometimes they will say, we're going to give you X now and X a certain period down the road. And that's what they did with us. So that everything that you said, contracts coming in, forecasting, all comes to fruition. So yeah, as Mike said, you better have your financials in order.
In the future, what you guys are looking for, is there something you would do different?
I don't know if I would do anything different on the exit itself, but what I would have done differently is instead of changing the strategic direction of the business to something that ended up being putting the business in this situation, I would have kept it going with the momentum it had and just stepped away from it. Because I think that's another option that I didn't really realize is on the table, is that I can just step away from this business and do something else.
No, I don't think I would do anything different. I still have, as Michael mentioned, good friendships with my business partner that I sold with. Rogers didn't sell; they still kept their share. But the company's still thriving; they're doing well, and it's kind of like now you're seeing your kid that you started. Now it's evolving. So no, I wouldn't change a thing.
I'm going to piggyback on Frank here too. It's like I have no regrets about how it happened. You could go through what ifs until you've gone nuts, and maybe I have, but I don't think it's because of the what ifs.
Guys, thank you very much for all your time and for joining in and sharing your stories. And we look forward to talking more again in the future.